A black swan event refers to a highly unpredictable event that has a major impact on financial markets. Some examples include the tragedy of September 11, 2001, the collapse of the housing market in 2008, or the pandemic in 2020. Black swan events can cause significant losses to your portfolio if you're not prepared. However, since black swan events are unpredictable, can you even safeguard your portfolio against those events? One way is through the use of diversification. By spreading your investments across different asset classes and sectors, you can reduce the risk of being heavily exposed to a single market. Consider adding alternative investments to your portfolio. Assets such as gold, real estate, and Bitcoin may act as hedges during times of market turbulence. However, it's important to remember that typically during a market crash, investors sell what they can, not what they want to. In other words, most black swan events see every asset class sell off, except for cash. Along those lines, many financial advisors recommend keeping some uninvested cash in your portfolio at all times. Each investor has to determine for themselves how much cash they would like to have on the sidelines. The more cash you have, the more you can buy when the financial markets crash. However, if your portfolio has too much cash, you will miss out on huge gains if the crash doesn't last as long or go as low as you thought it might. Another important aspect is risk management. Make sure you only invest in best-of-breed companies with great track records and outstanding future outlooks. If you're confident your companies will survive and thrive regardless of economic or geopolitical conditions, you won't be scared into selling your position in the event of a systemic sell-off. While some investors may use stop-loss orders to automatically sell their positions if they drop to a certain price, one of my own key investing disciplines is that I never ever sell into a market panic. If the market starts to crash, I don't sell. Instead, I buy. Of course, since I don't know how big the sell-off will be, I make buying plans in advance with lower and lower targets in every single one of my investments. Also, I only buy in small amounts so I can keep cash on the sidelines to buy at lower prices. Staying informed is also crucial. Keep up with economic news, market trends, and be aware of any geopolitical risks. Being proactive and prepared will give you an edge in protecting your portfolio. Having a long-term perspective is also essential. Black swan events are often short-lived, and the market tends to recover over time. Avoid making impulsive decisions based on short-term market fluctuations. Finally, regularly review and adjust your portfolio. The market is constantly changing, and being proactive in rebalancing your investments ensures that you can stay on track toward achieving your financial goals. While no one can predict when the next black swan event will happen, the one guarantee is that there will always be another one. By staying prepared, you can not only survive the next systemic crash, but thrive by adding to positions at hugely discounted prices.